Over the past 5 weeks, U.S. 10-year Treasury yields have mostly traded sideways, peaking at 4.6% on May 21st before falling to 4.35% in early June. What's notable about this decline is that it happened even as the narrative focused on accelerating government spending and concerns that a massive supply of new bonds could overwhelm demand. Instead, demand for Treasuries actually increased, likely driven by falling inflation expectations after recent CPI data. For example, 2-year break-even inflation rates dropped from 2.8% in May to 2.5% now. Now, one of the most conspicuous moves in the 10-year Treasuries came during the headlines about Israel striking Iran. Rather than rallying, yields ticked higher, meaning bond prices fell, contrary to the typical safe haven response. While oil prices have been volatile on these headlines, both the dollar and treasuries, traditional safe havens, have stayed relatively stable. Now, looking ahead, markets will be watching global headlines closely for any sign of the conflict broadening. There's also key economic data on the horizon that could impact 10-year yields, with the GDP figures due on June 26th and PCE inflation data on June 27th. As of now, the CME FedWatch tool shows the markets expect the Federal Reserve to hold rates steady until at least the September meeting, but any surprises in that data could quickly change those expectations. Now, if a trader believes that yields could rally from here, they could buy the June micro 10-year Treasury yield futures contract at 4.42 and target a move back to the January highs of 4.78. Now, a stop for this trade could be placed below at 4.20. This trade can make $360 if the target is reached and risks $220 if you're stopped at your level. Now, if a trader believes that yields could fall from here, they could sell the June micro 10-year Treasury yield futures contract at 4.42 and target a move back to the cycle lows of 3.65. Now, a stop for this trade could be placed above at 4.85. This trade can make $770 if the target is reached and risks $430 if you're stopped out of your level.